see that chat. And not the little countdown. Right, and we are live. Welcome back, everyone, to another one of our streams. Today, we are going to outline just the markets and what we see possible in this upcoming week. We'll go over some watch list stuff that we have, maybe some crypto stuff, just being a shithead right now. And then we will do our ICT lesson. Just today we're going to cover FVGs, something that we've discussed in the past, but today we'll just dive deep and kind of talk about that concept a little bit more. So, without further ado, we'll also outline some of those important levels, and I'll send those to you, Shane.
Yep.
So let's do first order of business. Let's outline our previous weekly low, previous weekly high. All right. Sunday open, probably going to be around here. Our high was Tuesday. We need this Monday. Monday, let me go to daily. Where's our high? Friday, Monday. Right there. This is what we have on the week, right? This is just kind of that previous weekly high, previous weekly low, Sunday open. Wherever that's going to open right now, we're looking at this fair value gap, right? We kind of outlined with this level right here. So we're seeing, are we going to displace that or are we going to continue holding below it? If we displace it, we can continue up. We kind of have a W on the 4 hour, on the hourly. So we're just watching. We're just observing. We have some levels up above. They're still need to be taken out, right? All of that stuff to the right. So we can outline those. I'll just outline those so that we are ready. Previous week high, previous week low, all of that. All of these levels that could be retested that were important for rejection purposes. And just whatever to the left of here. All of these highs, all of that on the 15-minute, right? We're looking on the 15-minute, as we've discussed. Those are the important levels. You can look on a higher time frame, but the 15-minute kind of gives you those really good liquidities. This 5-minute little Timmy candle. I want to expand that. That's pretty important. I can get rid of this. Do that. Go to here. Do the same thing on this. Previous week low. Whoop. Previous week low to there. Monday gave us the low and the high of the week. That's cool. Sunday open, wherever that is. Previous week high. That was Monday. On the daily, outline that. Was Monday right here with the gap down. Okay, and then we're still looking at this daily fair value gap, right? As long as we're holding below that, we can still continue to see some selling. All right, yeah, that's on our basic chart. So now let's look at the other chart, right, that we post for you guys. Okay, so let's outline important levels on here. Let's start with our weekly, right? What do we have on the week here? Have this gap up top. That's going to be important, right? I want to outline this. We can delete this range. We can outline this range now. That's our whole top to bottom. So 618 of this range. We can move this price point up. Make it that. I can move this to the right. That's at 618. That fair value gap is going to be important. So let's do this. Coordinates 21, 121. 21, 121. That's important. All right, that's probably going to be the important level here on the weekly. Let's go down to the daily. What do we have? Up top, we still have that gap, right? So let's outline that. This level can remain because we swept it, didn't displace below it. So that's still important to us, right? Right here, we can put this down here, this fair value gap. We did tap into that, so that's also important. Let's do 19, nope, that's 19,185. Let's put that here. All right, 185. Okay, on the daily, that's still important, that's still important. Now this fair value gap is also important, right? This one right here. Kind of want to see, are we clearing above this level or are we staying below it, right? It's if we break above it, 19,686. If we break above it, we can see further upside. This level remains important, our 19,822. As you can see how many times we have bounced on it, retested it. 19,822, do I have that on here? 19,822, it's pretty close to what I have. Put on this one. Do Alt H, right? We're using that. 19,822. It's an important level for us as well. So, right, we have this Timmy zone right here, which we have broken below. So we can TBR, we can come back into here, retest it, come back down. Right, we can do this on the weekly. It just depends on how they want to play it. Right now, so far, we're still consolidating. We don't have a huge move above on the daily or anything that has formed displacement. So we can't really say whether or not we're reversing yet, right? We can see a retracement, but we not yet a reversal necessarily, or at least I don't think. Unless they're taking this as a retrace and then continuation higher, right?
Big range.
Yeah. Exactly. 4 hour. What do we have above, below? Above, we've kind of outlined everything. Still have that. Watch out for that gap over there. Another fair value gap up here, up top, right? That we have rejected previously. So I want to see how we continue reacting to this up top. And then, what level can we outline below? We consolidate daily, yeah, looking at the tops of this, right? We can probably use this level as well. So are we continuing to hold above this level, above the close or above the open of this bearish candle, right? Or are we wanting to sell back down below it? So that's going to be important too. So let's do this, 19,572. Okay. Press OK. And then we'll send those levels to Mr. Shane. He can have them. He can have them right there.
Can I keep them forever?
Yep.
Cool.
So there's that. We cleared this LRLR. Yeah. I mean, retracement wouldn't be bad this week for news. We have retail sales on Monday. Tuesday, we don't have anything for U.S. news, which is the main thing that I look at. Then we have Wednesday, we have FOMC, so federal fund rates. We'll see what Powell says. They can easily, consolidate it Monday, Tuesday, and Wednesday will be the decision of whether or not we're cutting rates or what we're doing, right? So that can either send us or drop us lower, give us either a retrace down to manipulate, which will be that final manipulation, right, from where we can continue going, or they can send us up from where we can reverse back down, right? That's where we're outlining up levels and down levels. And then Thursday we have unemployment claims, and Friday we don't have anything for U.S. news. Obviously other markets trade, right? But those are just the big things that we look at. So yeah, just waiting the market to open to see what we do, see whether or not we gap up, gap down. If there's a gap, look for it to be filled. Just your usual stuff. All right. Capiche capash. Crypto's looking iffy. Right, this could have been just a little retrace legs on everything. Haven't seen quite the displacement that we want to see, right? Or that we usually see. So haven't had our big displacement and a retrace into that displacement to continue up. I've outlined on Doge just this order block to see whether or not we want to hold it to continue higher. But this weekly is kind of getting a little iffy. So we'll see how this next week opens, right? The one thing that I do like is that we don't have a weekly fair value gap until up here that we haven't displaced, which perfectly leads us into our discussion of ICT, right? Fair value gaps. Why is the fair value gap considered a fair value gap? What makes one? So in ICT terms, there's three different types of gaps, right? You have a gap in price. That's where let me pull up our useful tool, the candle creator. Let me do that real fast. Put this here. And then switch this to this capture. There we go. So we have the candle creator. All right. Actually, let me share that with you as well. Change window. Candle creator. Oh, and Russ is in the house. What's up, Russ? If you guys have any questions at any point, make sure to leave them in the chat. Ask away. Okay, so we have, right, 3 different kinds of gaps. We have your, let me add bullish candle. So you can have your volume imbalance, right, which is where the wicks form the gap, right? So it's just price traded through it, but there wasn't necessarily the volume that it needed to trade through, right? That's a 2 candle pattern, right? That's where we have a gap in price. So the wick of the previous candle touches the open of the previous candle. The wick of this candle goes into the body a little bit, or it can be like this, right? Doesn't necessarily, the body doesn't have to touch, but we just have something like that, right? Where we have a gap, but price still traded there, right? That's your volume imbalance. Then we also have a fair value gap, right? Which is going to be a 3 candle pattern. That's where, we add another one. Let's do this. That's where we have a gap that is formed by the body of the candle, right? I'm using bullish candles. It can be bearish too, right? Like we can have a bearish candle, but just for the sake of doing it. So this is going to be a fair value gap, right? Just a gap where price didn't necessarily balance, right? Think about it, as ICT says, think about it as you're painting a house, right? And you're using a roller. When you go up, that's where price kind of where you have those splotch spots where paint didn't necessarily touch the wall. So then you have to go back over it in order to fill those gaps, right? That's what price does. It rebalances, comes up, rebalances, comes back out, right? What we say, price goes to sorry, I lost my train of thought. Work stuff. It's where price goes from external to internal to external, right? That's where price rebalances those gaps, and we always come back to fill those gaps, right? Whether it be volume imbalance, whether it be this. We also have just gaps in price where you have no price that is traded at that certain point, right? That's where what happens when we gap up or gap down, right? So you can have something like this as well, where the wicks don't have anything between them, where the bodies don't have anything between them, right? Where like right here, you have this empty space where there was no price that was traded there, right? So obviously market needs to come up here and fill that up, just because now it's just an empty room, right? There's nothing there. Over here we have price that traded there, but there wasn't any necessarily orders. And then over here, price fully traded over here, but there's just a gap or like an imbalance, right? So with that, let's go back to our chart and let's go to right here, put this here. Let me turn on my actual window capture for you guys. Change window. Cool. So now we're talking about fair value gaps, right? We've covered ranges before. All right, we have a premium and a discount. We covered this on stream yesterday, I think, where we kind of talked about that warehouse example, right? And you just like buyer seller interaction. If you're a seller, you don't want to sell your product for cheap. You want to sell it at a higher price, right? And if you're a buyer, you don't want to buy your product when it's expensive. You don't want to buy your raw material when it's expensive. You want to buy it when it's at the lows, right? You want to buy it at like the market price, right? Or your not retail price, but whatever. Fuck, what's the word? I always forget. There's retail price and there is
Wholesale?
yeah, like wholesale price. Right? Restaurants don't sell their food for what they buy it for. They go to Restaurant Depot, stock up on inventory for cheap, and then sell it as a finished product. So that's like, right, that's what we're looking for in terms of ranges. Right? You don't want to be selling your food over here, right, for what you bought it for. You want to be selling your food up here as a finished product. And same thing as a restaurant owner. You don't want to be buying your product right here and then selling it down here, right? So that's where we look at those premium discount ranges, right? Anything in discount is going to be discount for longs, right? That's where you're buying. Anything up here is going to be discount for shorts. That's where you want to be selling. Hey, you don't want to be selling when it's over here because, right, there's only so much room to the downside still. You want to be buying right here. And that's where we talk about fair value gaps, right? You have still this gap, right? If we're talking about this whole range, right? This is a gap right here, but it's not fair value, right? Why is it not fair value? Because it's not in discount for you. It's not in discount for you to sell over here, right? It's going to be more in discount for you to buy over here, right? It's going to be more in discount right here where the inventory price is nice and cheap. That's where you want to be buying your inventory, right? And that's where you can start looking at those ranges. That's why OTE also matters a lot. That's why OTE is important, because if you don't necessarily have a fair value gap, it still gives you that optimal trade entry where you want to buy your inventory, right? So yeah, we're on the 5 minute. So over here, right, we can take any gap, like disregarding the price that goes to the right. You can take your high and low. That's your range that you have defined, right? And then what do we see here, right? There's your fair value gap because it comes into discount. It's a little bit of it is in premium, but you see that price doesn't necessarily reject it where it's premium. You reject it when it's in discount of it, right? That's why like 50% of a fair value gap matters. That's why you want to outline the whole range and see where's it going to be in discount for me to sell from? Where's it going to be better for me to sell my product, right? You could sell it over here, right? But oh my God, I could have sold it over here, right? That's a little bit further up above. So just looking at ranges and defining those fair value gaps, right? We always talk about, hey, is this fair value gap for me? Is this fair for me to buy at this price? Is this fair for me to sell at this point as well, right? So we were always looking at ranges. All right, so over here, we didn't necessarily come into it. Would have been nice if we retraced way lower, right? And maybe tap the open of this candle. We can also come down way below it, right? So like this wick could come down and tap a little bit lower. But as long as the wick closes above the fair value gap or the body closes above the fair value gap, right, you can consider that as holding that. Similar thing over here, right? You can take this whole candle itself as just the range, right? You have your high, you have your low, right? there you go. Where is that? You have your fair value gap, right? It would be more fair value for you to. Oh, why is not selecting? There we go. A bit more beneficial for you to sell over here. Doesn't necessarily retrace into it, right? That's where we kind of also take those inverse fair value gaps. That would be even better. That's in discount, but price doesn't necessarily come into it, and we just keep going down. And there is a good example of that volume imbalance, right? That we talk about. You see how price came back to it. We didn't leave it just standing. There's your volume imbalance, right? 2 wicks form it. It's usually formed by the wicks. Volume imbalances formed by wicks. Fair value gaps formed by bodies, right? And then gaps is formed by the lack of both. That's your. Which one's that? If you want to learn more about that, I think ICT core content that talks about it a lot. There's a video on it where he explains the difference between all the gaps, and I suggest everybody watch that. It's very important. I forget which month, but it's like just the basics, right? Covering the basics. Here today we're covering more of like, or throughout these months, we want to cover just the basic ICT stuff, more related to the 2022 model. It's probably the simplest one that you can trade, right? But we also talk about the importance of the system, right? ICT isn't necessarily, applying every single concept that he teaches you. Yeah, learn it, but use it sporadically, right? Use it combined, right? If you're building a house, you're not using all the tools at the same time, using certain tools together, and you're also using certain tools by themselves, right? But you're not throwing your whole toolbox at that fucking house and building it all at the same time, because you're going to get fucking confused. Right? Similar thing with trading. If you have a system that works, just use what works for you and use those tools sporadically. Use them one at a time instead of throwing everything together and hoping it builds something. If that makes sense. So we continue going, right? Over here, I'm just looking for examples. Over here, this is a range, right? We have your high, you have your low. So let's capture that. I'm using a GAN box to outline this. OTE. I'm using a GAN box to outline this. So that gives you a good definition, or a solid one, right? Just select this. And then these are my settings, right? I have 0, 1, and 50% outlined. So that 1 is at a green, so then it stops about above the 50%. That's all you need. You can also use OTE, right? Talk about high to low. You can have your 50% wherever you want it to, right? So anything above 50% is discount for you. Anything below 50% is premium over here. Same thing right there. There's your discount, right? Where did price come into? Above the 50%, we retrace into this fair value gap. So anything on it is in fair value as long as it's above the 50% of the range. And look at this. We reject, right, the consequent encroachment of that gap, right at the 50% of this gap. Right, we did get a little bit above that. The bodies did not get above that. And we just continue selling down, right? Similar thing. Fair value gaps are also very good when we talk about displacement, right? Displacement out of something once we sweep an important level. That's what we want to see, right? We want to see a big displacement. Over here, right, you can take a range. We didn't necessarily displace or form a fair value gap. I'm sure there's like a super tiny one right here, right? Super tiny one right there. But then guess what we also have? Look at that. We have a little volume imbalance right here, right? There's your gap in price. And guess what we did? We came back to fill that, right? You can also use those. There's VI. I'll mark that out so that we have that volume imbalance right there, right? So then you take your range. What range did we create? We created this range right here. And where is that volume imbalance sitting? Right below the 50%, right? Look at that. We traded into it and then continued up. That's what we always want to be looking for. Always look at your ranges. Where am I? Am I in discount? Am I in premium? If we're looking at this higher time frame, right? Let me go to this. if we're looking at this higher time frame range, right? We just take this range, for example, right? Where are we? We're in deep premium or discount, I mean, right? We hit a fair value gap inside of it, right? Why is it fair value? Again, because it's below the 50% of that market point, right? We hit the 50% or below the 50% of it fair value gap. So now it's like, would it be smart to short from here? I mean, you could, right? Price could still go lower, right? But what would we want to see? We would want to see this price trade back into the discount of the range that it has created and then continue lower. Because where would it be smart for us? Right now, we're accumulating inventory, right? Right here, accumulating inventory. We can have a retracement where we sell our stock, right? We sell our finished product. We sell a dish after we shopped at a restaurant depot, bought a bunch of pasta cans, whatever, right? And then we sell somebody that tomato soup up here, come back down, buy more pasta sauce, tomato sauce, sell soup up here, right? And that's what we keep going, right? We can outline this range right here. Not necessarily the deepest discount, but we're still in discount. So we want to see a little bit of a premium. I'm mixing my shit up. In terms of longs, right? In terms of longs, you're in discount. In terms of shorts, you're in premium down here. So what do we want to see? We want to see discount for shorts, right? Discount for shorts is above this 50% line. Discount for longs is right where we're at. We're hitting fair value gaps. We're hitting that, right? But we're also not disregarding that idea that we could go lower, right? Because even if we can take this range, right? Even just like top to bottom, that's why we outline this 50%, right? This OTE, that's why we outlined this level right here. Yeah, what do we have above? We still have fair value gaps up top, right? They're fair value because they're in discount for shorts. And then down below, right, if we're talking about this other range, we're in discount for longs, right? That's why those fair value gaps, this is a fair value gap, and this is a fair value gap up here. Anything in between is just price action, right? You can still use it, but those are like those high probability things, right, that we talk about. Where's let me find a good example of maybe where we have multiple fair value gaps, and when we retrace into one of them that's in discount. No, there was a great example where we did that. I mean, this is kind of below the 50% line. Got not OT. My game box. Right? Let's take this range, for example. Look at where this wick is. Right? That's right in discount. What do we have over here? Is this a fair value gap? Technically, yeah. Is it in discount? No, it's not. That's why you see price is not necessarily holding that, right? You see some body closes below it. But then what do we have below it in discount? We have this small little fair value gap, right? Our body's closing below it. No. Do we have any other fair value gaps, right? No, we have a little volume imbalance, right? But that comes and gets traded through. Again, but what do we have here, right? That's in discount. So in the range, okay, we came into discount, we re-upped on our soup, and then we come back up and we sell it to our consumers, right? So we're always like, if there's multiple fair value gaps, look out for the one that's in discount, right? Never disregard. Yeah, it can bounce on the first one, but never disregard the second one where price hasn't traded yet. As that roller example, right? Once again, like you have to go over that spot in order for you to have a finished wall. If not, then it just looks ugly, right? Shane's a painter. He knows.
Dude, that's fact.
Huh?
That's facts.
Yeah. So you want to have proper lighting, right? Whenever you're painting, you want to know it's like, okay, am I fucking gonna see, like, even if you're doing like a beige color on a white wall that has been primed, right? Still, like, on one day it's gonna look fucking great, and then sun comes out or shine a light on it and you see those white spots poking through, you're like, fuck, this looks fucking ugly, right? So you want to go over it multiple times, right? That's why we see price come into discount, come into premium, right? And it's rebalancing those fair value gaps. It's closing them out right over here. What do you have? Price traded through it, closed that out. Price has but no body close below it. Okay, we continue up. We form more fair value gaps, more over here. Continue down. Price trades through them, filling those gaps, right? You're rolling, you're painting that wall. Then finally, boom, you have your finished product. So over here, right? And then you can look at it within a range term, right? You have your high, you have your low. The body's held, right? This tiniest little slither of this fair value gap is resting in discount, right? And then I'm sure on the 1 minute we have something else over here, right? So you can look at that in higher time frames and lower time frames, right? On the 15 minute, it's going to look different than it did on the 5 minute. Where were we just now? Probably right here. Yeah. Right. On 5 minute, it looks way different. Right. On the 15 minute, we have all of these fair value gaps that we still haven't traded into. And that's exactly what we do. Then we come back down. Over here on the 15 minute, right? What do you have? You have a fair value gap right there. We saw how it looked like on the 15 minute. Why is that fair value? Because it's above the 50% of the range, right? It is in discount for our shorts. Right? It's in discount for us to sell stuff. Boom, we sell and we fill these gaps. So that's when you start implementing your M patterns, whatever, right? But we're not talking about that today. We're just talking about those basic concepts, right? And then what else do we have up here? Oh, is that an order block? Something that we covered this past week? Yeah, it is. Look, fair value gap, order block. Why is that an order block? Cool, we swept something important over here to the left. The top of this candle did not get traded above, or it did, but we did not hold above it. And then what do? The close of this candle is below the open of this bullish candle, right? We traded through it with displacement, right? We don't have just like a wicking through it, okay? And then we form a gap in price. That means the opening of this is lower, the high or doesn't quite reach the bouncing point of this. So then we have this small little fair value gap right there, right? Then price comes into it, rejects not only the order block, but also the fair value gap. And we retest it multiple times, right? And then, okay, what do we have? We have all of this price, all of these paint spots that need to get filled up, right? And that's what we do. So then we can take this whole range, right? It's a little rangeception, sort of becomes, right? All of this, these fair value gaps, if we're taking this whole range, this range as a whole, all of these fair value gaps are not fair value to you, right? You don't want to be buying your inventory up here. This is still like huge prices, right? You don't want to be buying up here and then selling right there. You're selling right there. Okay, where is my next price point? Right there, you have a wick. Right there on the 15 minute, right? And then you have just a huge gap in price, right? That's where you just you slap the roller in one place and then you kind of paint and then you slap it right below it, you kind of paint. So then you have this spot of just white wall, right? That's where you just decided not to fucking paint there for some reason. You're just like, yeah, whatever, I'll get to it, right? Cool. You come back to it next day. Oh, fuck, I missed that spot. Completely missed that spot. It's just primer, nothing else. Okay, I need to repaint that, right? Boom, there's you coming back the next day repainting this little gap in price right here. That's your wall that hasn't been finished yet, right? Over here, you've painted, but you did kind of sloppy job, right? Okay, you come back over it one more time. Over here, you just said, nah, fuck that, I'm not doing that. Not today. You come back the next day, finish that up. I think honestly that might be it for me for the fair value gaps in terms of that. Mr. Shane, if you have anything, general reminder for everyone, if you're just now tuning in, make sure you give it a little like, give it a little share. We appreciate you guys for tuning in, being here with us. If you haven't seen any previous live streams, I suggest you go check out either the wall, the pin post on my wall, or the pin post on at the Paper Traders. We have all of our links linked on there. Check out YouTube. Go under the live session. All of those previous live streams that we did are titled, and you can rewatch them and learn through those. Hopefully, get a little nugget from them. Right. If you guys are not following Hazed Beats on Twitter, make sure you do so. Phenomenal guy, calling the markets like it's fucking nothing. Make sure you're following at Big Timmy Hedge on Twitter as well. Phenomenal trader. Invented Timmy time. He's invented Timmy candles. Just insane trader with like those concepts that something that you've never thought of, but it fucking works so well. Right? It's something that you've always seen kind of work, but you never actually like took the time to test it. He takes the time to do that. He finds that shit out. So go follow him. Yeah. Do you guys have anything? Timmy, I saw Timmy just joined. I mean, that's our lesson on fair value gaps, right? I've done them before as well.
I don't think you have. I don't have anything to add with the fair value gaps. I think you covered pretty much most of it.
Yeah. So over here, right? That's why we're watching this daily fair value gap. Let me notate it. The D FVG, right? It's if we're taking this weekly range, right? There's our weekly range. Inside this weekly range, we have that fair value gap, right? It's below the, I think it's like right in that 50%. Oh no, yeah, it's like right above it, right? So we're watching this. Are we gonna break above it and then continue higher, retest it? Just because we still have this volume imbalance, right? On daily, looks like a volume imbalance. I'm sure on the 4-hour, right, we actually have. No, we don't have a gap in price. We still have like a little volume imbalance. Just that sometimes on those gap downs, we really have like just a gap, right? Nothing happened there. That's that example of like, yeah, you just came in. If I can put roller in one place, put the roller right below it, not touching that other paint that you painted, you're just like, fuck it, I'll come back another day, right? And then you go back over it. That's about it. Yeah, that's all I got for today. We use the Candle Creator, guys. Phenomenal tool. If you need to test those concepts yourself, do so. That's on our website, papertraders.io. Check that out. We just pushed another update for the trader log. You're now able to upload your broker's statements on there, right?
Yeah, I'm working on a fix right now. Me and Russ have been talking back and forth, trying to figure this out.
Yep.
Just because each thing has like NinjaTrader has different import or exports, TradeAvate has different exports, and I'm just trying to hash it out. But it should be good by later tonight, I'd say.
Yeah. And I think, are we able to upload pictures on there now?
Yes.
Yeah. And now you can also add, where is it? Under.
Should be under the add new trade. If it's not, I might have rolled back one too many, and I will push it live in a sec.
Add trade. Yeah, I don't see. I see market industry plan. Everything under that. Add trade. Yeah, symbol.
Yeah, it's probably when I rolled back this fix. I'll push it live in a
Oh
sec.
yeah, you're good.
At least that part. And then the CSV should be good by later tonight.
All right,
Been
and
working on it during the stream.
so on the Trader Journal, let me just show you guys real fast as well, just so that you're familiar with our tools. Do that Windows capture again, right? There is that. All right. So this is just a general dashboard overview. Just gives you total P&L, win rate, largest profit, largest loss, profit indicator, average hold time, average profit, average loss. You can go to trades. You can import that CSV file. You can delete all of your previous trades. You can add trades over here, right? You have stocks, futures, everything's already predetermined, right? So if I click NQ, it knows exactly what the contract size is, and it's going to calculate it appropriately. So say I enter 21,525, and I enter 2 contracts, right? Historic trade. So then I can enter 21,300, right? I take it off. Can select the type of setup that I used, classic setups, strategy setups, right? Using the strat or ICT concepts to say I did a fair value gap, right? I took it off of the 5-minute fair value gap. My trade plan was wait for liquidity to get taken, uh, taken and price displace above, wait for FVG and retrace into it for a continuation up. Right, that's my trade plan. Market conditions, I typically leave this one just whatever. And how confident was I in this trade? I was pretty confident, right? I'll let that trade. Okay, what does that say open? That should be long entry price. So I can close this trade, right? Exit price 21,300. Close trade. Look at that, right? It knows exactly how many contracts I've traded, what I did. I thought that was supposed to be historic. 21, 525, 521, 600. Let me do this. Right, and then stocks, it obviously knows all the other stuff. Crypto, you can put in the symbol, however you did it. Let me try that again one more time. Q historic. Oh, hey, whenever you record it as a historic trade, it still puts it as like an open one.
Yeah, I really butchered stuff when I rolled it back trying to do this import thing. I'll fix it.
Oh, you're good. Yeah, I just found that out. But right, it gives me this. Then I go to my overview. It shows me a total P&L, my win rate, right? I can throw some fucked up trades in there. My hold time is 1 minute. That's what I can change over here, right? Our entry price was like say 920. And those are exit price. Let me close that out. 9:40 p.m. So then exit 21,600, right? Close trade. Now it calculates how much I've made, my average hold time on that singular trade, profit factor, right? And the largest profits. Then on the dashboard, shows you your paper score. How well are you doing? Your max drawdown, everything consistency wise. Gives you your performance chart, how many open trades, how many closed trades you have, total number of trades you've taken. Just kind of gives you a little bit more of an overview with just like that chart. And then in the journal session, you can add your entries, right? Title it, notes it, session bias. You can add what you were thinking for that. You can add market analysis, just key levels that you have outlined. So you can do a pre-market journal, outline those key levels, and then you can do a post-market journal, right? Of like, okay, this is what happened. This was my plan. This is what I was thinking. Gives you that idea of like, hey, what did I do good? What did I do wrong? Right? Something that we talk about all the time is just those data-driven decisions. Right? Pish kapash. Also, NQ Daily Plan will be out by top of the hour. Russ, I suggest you follow that guy as well. Russ the Thracian. He posts great daily plans for NQ. Phenomenal outlines, all the levels, just what he sees. He has a great read on the market as well. So make sure you follow that guy as well. Shine like the sun. You're truly blessed. Amen, brother. Thank you guys for watching. Appreciate you. Give it a like. Give it a little share if you enjoyed it. We're trying to build this on the word of mouth. We're not, pressuring you guys. We're not running ads or anything like that. We just want you guys, if you enjoyed something, if you took something from it, share with others, right? Let them learn. Bring the community together. If you guys are not in Discord yet, make sure you check out papertraders.io. You'll find all of these tools that we just discussed, right? Trader log, ICT trainer, risk calculator, candle creator that we used today. We have 2 spots left for lifetime, monthly subscription, weekly subscription. Take what you need for the week and then leave if you want to, or stay if you really liked it. Switch over to monthly, switch over to the lifetime. We appreciate you guys. Follow at the Paper Traders, that's where you'll see most updates on there. Follow the guys that I mentioned. We appreciate you guys. Thank you for watching. We'll see you tomorrow morning. I'll be doing a stream. We'll outline pre-market levels, everything that we might see happening on the day, or at least in the morning session. And then I should be on. We'll do our daily live stream a little early tomorrow. probably
cool with that.
yeah, because I'm closing tomorrow for work, so probably maybe like right around market close or so, just about that time.
Yeah, that's
Uh,
perfect.
yeah, and tomorrow we will be covering breaker blocks. We'll dive into that concept, explain them. So it looks pretty good. Yeah, we got OTE, which we'll discuss, and then we can kind of combine it with fair value gaps as well, just as we've covered it yesterday or today. But yeah, thank you guys.